ECB, ECB, ECB. Yo, hey, good morning. The live stream for the ECB thing. Let's see. Anyways, hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. Trying to see, there's no live stream? Really? There's no live stream for the ECB thing? Come on, ECB, there's a thing called YouTube. Anyways, hey, we got an ECB day. Maybe they cut. Why would they cut in July? I've been saying this before, like, July is not a live meeting for central banks. But boy, the news out of Germany the last, 3 days in a row? Pathetic. 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 German confidence came out as a 10-year low today. And Germany is the largest economy in the Eurozone stuff. So if they're going to cut in September, might as well cut now, I guess. So anyways, we'll see if the ECB does anything. By the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I hope these webinars are helpful. Maybe a little bit entertaining, but very, very, very helpful for you becoming a success at currency trading. So please ask questions, get involved. Please like, please subscribe, please comment. Help support our community that way. It's very important for YouTube that we get likes and comments and subscriptions. I've been doing these webinars every day for 15 years or something. Hey, nice to meet you. And if these webinars are important, they're sponsored by Traders Way. They want to be the prime broker for your successful Forex trading business. And that's why I'm here. I'll make you a success. You open and fund a live account at Traders Way. It's a pretty simple business model to understand. TBM says, how does ECB affect Euro Turkish lira? Well, if the Euro gets weak, okay, let me talk about that for a half a second, then we'll move on. The Turks cut interest rates today. Great, but ECB is going to cut interest rates today, so nothing happened. Okay? So there you go. So without further ado, I was going to bring up YouTube. There doesn't seem to be a YouTube channel, so we'll have to listen to Trade the News. So let's just do that. Let me flip this over. Trade the News. And I think we're about 5 minutes away from an announcement. Cool. So we'll run this in the background.
To remain unchanged, the 7-day refi rate currently stands at 0.00%. The deposit facility currently stands at negative 0.40%, and the marginal lending currently stands at 0.25%. And we'll announce the rates, and then roughly today there's about a 30 to 40% chance that the deposit rate could be cut further into negative territory. And again, it currently stands at 0.40%. Also on the lookout, if ECB does revise their guidance, the current view on rates is that they remain steady at current levels until the end of the first half of next year. We did see them push it back 6 months at the last meeting. There's some speculation that perhaps the more logical route for ECB today is to push back that guidance once again. The ECB bond buying program was halted at the end of December of last year. There's some speculation that Draghi could announce the restarting of that program.
Okay, be careful with Euro Swissy.
Topic in the past on deposit rates has been tiering in order to help some of the peripheral countries. ECB has played down the tiering possibility, particularly the northern central bankers, for just under 3 minutes for the rate decision. Sometimes it is a few moments delay, but it's been coming out pretty much on time in the past few months.
So this one is what I would hope for here. That looks pretty decent. I might play ZAR though, just for fun. Although it's at a low as well, right? I don't want to buy pound under any circumstance. Euro Aussie. It's not as good. I'm gonna do Euro. I'm gonna change this to Euro ZAR, just to be that kind of dude, you know? Dude, seriously, what do you do, dude? Rand. 'Cause I ran so far away. USD ZAR, Euro ZAR. That'd be cool. That'd be cool. Okay. Already kicking off the 4-hour 21, like this one, and like this one, and like this one. So anyways. So good morning, everybody. Brooke is buying Euro Swissy. Okay. I mean, it's at support for sure. A lot of money moving to Swiss bank accounts right now, though. Don't really want to get in the way of that. Remember, my prime directive in July is not to lose money. I'm not trying to make money. I'm trying to not lose money. It's the number one thing. Because if you lose money and someone looks at your trade history and says, wow, you lost a big chunk of money in July. Then they look at the beta and they're like, nothing happened in July. How could you possibly lose money?
We're just under a minute for the ECB rate decision.
What's your answer to that, right? You lost a lot of money, but nothing happened. How could you possibly lose a lot of money when nothing happened? I forced it and nothing was happening, so I doubled the amount I traded, and then that didn't happen, so I doubled the lot size, and that didn't happen. And like, no. So if the beta is 1%, I'm trying to get 2%, not 10%. That's all. And I'm not saying that, Brooke, I'm not saying that you're doing that.
Okay, we're just coming up to the top, the quarter, 45 minutes to the hour, 10 seconds to the ECB rate decision. Again, we'll announce the rates. No expected changes in the rates. ECB leaving the rates unchanged across the board there for the ECB. Rates unchanged.
Wah, wah, wah.
In terms of their comments, they decided that interest rates, let's see.
Remember, less for longer.
Euro rising here, that the rates have, all right, they maintain their guidance. They maintain the guidance at least the first half of 2020, so no change in the guidance. And they'll reinvest the bond purchases well past the first rate hike. So no change in the initial rhetoric here from the ECB. Euro up about a 10% there, 111.55 being approached. And no change in that, no change in the guidance here. Rates for the first half as long as it's needed. So no change in the rhetoric.
Where's my Euro Swissy? Yeah, there we go. Yeah, I mean, I said it was clearly the bottom. There's no doubt about that. Doesn't mean I have to buy it, though, Brooke.
And again, ECB said to be changing the language to allow for rate cuts down the road if necessary. And again, they said they're committed to the symmetry of the inflation aim, and that the ECB needs highly accommodating policy for a prolonged time. No change in policy, but dealers interpreted it as a move towards a potential rate cut. Again, ECB has previously hinted that rates would move higher. ECB also in the ECB will examine options for tiering and potential QE. So examining the options for tiering and potential QE. So opening the door for more stimulus down the road.
Okay, you see that?
Just stressing that they'll act as determined if the inflation outlook falls short of target. Nothing really new here. Draghi's well telegraphed this. And again, they're just ordering the reviews of options for the tiered system for rates. And we're seeing very little movement in European interest rates. The Bund future are largely unchanged from where it was heading into the decision, 174.35. The euro did pop briefly, but now 111.36, back to where it was ahead of the ECB announcement.
So there you go. Now they're thinking QE.
What was expected here that Draghi will lay the groundwork for future stimulus before he steps down. So keeping those options open. Again, the euro off its best levels, now at fresh 2-month lows, 111.30 being approached.
Yes, sorry for starting early today. I just want to capture this ECB announcement.
Again, the rhetoric here for the ECB, no tweaks in the initial forward guidance or bond buying, reinvesting of the interest. The tweaks here is that they're examining the options of the tiering and potential QE, something well telegraphed by Draghi. Let's put a little pressure on the euro. The German Bund is right there at record lows, negative 0.40, hovering right there where the deposit rate currently stands. But again, ECB hinting that the next move will be lower rates here with the examining of these options. So additional more stimulus is a headwind here for the euro and for the rates.
There you go. They pretty much said they're going to cut next time. Yep. Joe says this meeting didn't take it into consideration the recent PMI readings. Remember, this isn't like a GDP report. Human beings are sitting around a table discussing the situation. It did take it
following the ECB statement, the yield on the Italian 10-year falling 6 basis points.
Okay. So we got resistance on top. We got support on the bottom. Pretty clear. It's the monthly and weekly pivot cluster below us. And the 4-hour 21 price action resistance above us. Now that was tradethenews.com. I've been working with tradethenews.com for 13 and a half years. BIS? What do I know about the BIS? You know how they say Forex is $5 trillion a day? That comes from the BIS. The BIS has a fantastic website with wonderful resources for fundamental analysis. So you should fall in love with the Bank of International Settlements. Okay, so I'm going to bring up Trade the News. Oh. And that's that. Cool. So everything the same, but they're thinking about cutting interest rates and doing QE again. So imagine going down to, I think they'll just slightly move it, because my experience with the ECB over the last 10 years, I think Trichet was a little different, but it was so long ago, maybe I'm remembering it differently. But the ECB does things like we've decided to do less for longer. And I'm like, what the hell is that?
Again, Jill's just picking out in terms of that guidance here, although it was maintained to the first half of 2020 and they tweaked it.
So I would say things like they'll probably cut the lending rate, the deposit rate, sorry, from negative 0.4 to negative 0.5. Ah! I mean, not really radical, right? You want radical? Cut your hair like that. My wife's like, what the hell did you do? I'm like, I got this new Flowbee, man. It was awesome. You attach a clipper to a vacuum cleaner, and oh my God, it's So anyways, I don't think they're going to be radical. They'll cut it to 0.5, and then they'll announce that they're seriously thinking about doing something sometime in the future, maybe 2020, and that would be maybe some quantitative easing again. So just imagine that they're facing an obvious train wreck, and they're going to talk about what to do. And then the train will hit them, and they'll say, yeah, we should do something. Random Nate, is it free? No, of course it's not free. Actually, Chuck says 4 on top, 3 on the sides. No, actually, we went from 0 to 2 in the back. Okay. Okay. You see how the Rand is working, guys? Cool, right? So we looked at the 4-hour 21 here. We looked at price action resistance here. Then we had the news. We used this as role reversal. And now it's dropping down. Now we're running into support, so don't get all excited. All right, don't get all excited. These are 5-minute candles, yo. How much is it? I don't know. I don't work for TradeTheNews.com. I think at one time it was $300 a month, but you were not allowed to actually sign up unless you were an institutional investor. And so we used to have this thing where if you were an FX boot camper, you could call them up and say, hey, I'm with FX Boot Camp. I want to pay $300 a month for your service. And they'll say, okay, we'll let you in. But otherwise, they wouldn't let retail traders in. But that was 10 years ago or something. So I don't know what their business model is now. I don't know who they take. I don't know how much it costs. But I've been working with them forever. Okay, so how much is it? It's a tax write-off. Random. We got to get you to the point where you're desperately looking for tax write-offs. It's not how much is it. It's like, I'll take it. I hope it's lots. I hope it's super expensive. Right. I used to do these, when I used to travel and speak at all the conferences, I'd go to one conference and drop like $100,000. And I loved it because it was vacation. Can you imagine? I'd do multiple. I wouldn't be that big on multiple ones, but I've certainly been silver and gold sponsors at big conferences and stuff. It's pretty cool. We had a lot of fun. That's why I don't really want to do conferences. I just want to do the parties, right? I just want us to get together and have dinner. Prince, I prefer manual. I love pulling the trigger. I love getting in and getting out of trades. Love it. But it's often not possible. Okay, especially when you're swing trading and stuff, right? Sometimes you're like, well, I know it's going to open there, but I'm going to have trouble being at my computer, or I don't want to miss it, that kind of stuff. So you throw it down. But you need to use an EA along with that. So I use, do I have it on this machine? Yeah, auto stop. Okay. I use auto stop. And it says, if an order is placed, so remember I throw down a working order, if it's triggered, you understand? So it goes up and it touches your order and now puts you into the trade. The auto stop says, oh, whoa, 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 there's a trade. Where'd that come from? And you can change this and say, well, I immediately want, on this new trade, I want a 50 pip stop loss, and I automatically want a 200 limit. Okay? And I would throw that down. Okay? Now, I don't have it turned on, so I don't see his happy face here. Okay? But you set that up, and that EA waits around for new orders to go in. And once it moves one tick, then a stop and a limit is put into the market to protect that position. Isn't that cool? I would never throw down a working order. I mean, you could do it manually, right? But that takes so long, especially if I'm in scalping mode and I'm going to drop 20 trades today. Managing stops and limits gets pretty tedious, right? So you can do like the old school way, and I haven't done this for years, but you can change your lot size, right? And then you can put your stop, and then you put your take profit, but then you got, then you got to look at the prices. I don't know. I'm really slow this way, where if I just use an EA, I can manually do it too. I could just say, okay, I want to buy here. Buy! And it'll go 50 below, 200 above, done. And I didn't touch a thing. And then, of course, I can manually move things later and say, well, 50 is not quite enough, or maybe it's too much, and 200 is way up there, so I'll bring that in. And you can manually adjust, which is really nice. Okay. So we're back to the support area I talked about. So remember, this was the resistance area where sellers sell. This is a supportive area where buyers buy. And if you're in the middle, you're doing something wrong. Fins between period separators. Not sure what you mean. Ask again, best. Random name says, I don't use stops. Okay, you can do whatever you want. It's your life, it's your money. I would not recommend that. Okay. Usually people, and I'm not saying this is you, but usually people that do that, they don't know how to analyze the market properly. They don't know where to put their stops, and they make mistakes. So then they say, well, it's my stops. I disagree with that, of course. Oh, fibs. Thoughts on the fibs between period separators. Okay, so I think what you're talking about is maybe daily. I use fibs all the time for dailies. Okay. I mean, you're basically throwing down pivot points. They're not much different. Okay, so I do something called the Asian fade. So let's say yesterday did this. My plan for tomorrow is going to be this. Oops. Okay. If this was today, my plan for tomorrow is this. Tomorrow. Okay. So how do I start measuring for potential entries? 382, 50%, 618. So I'll say, yes, somewhere in this area I want to sell. I believe that's what you're asking me. Yeah, Ernest brings up a point. He says, I used to move my stops a lot. Often when I'm analyzing people's trading history, one of the things, like I always analyze your stops, where you put them and how quickly you move them. And I find that if you're afraid of losing money, okay, that's the prime thought process in your brain, okay? If you are afraid of losing money, you move your stop really quickly. For some reason, people get really big on locking in 1 pip profit. I think that's a dumb idea too. But they're just so afraid of losing money that they move their stop quickly, and they never make money. Now, the opposite is if your number one thought process is that you are going to make money. Like when you're golfing and you're going to make your 6-foot putt, some people think, I'm going to miss it to the right. I'm going to miss it to the right. Don't miss it to the right. Don't miss it to the right. So they miss way left, right? Versus a golfer that has a 6-foot putt and they're thinking, I got this. I can make this. I know I can do this. It's going back in the cup. Hit it firm. It won't break if you hit it firm. It's going in. I got this. There's a big difference, right? So when your primal brain is saying, I'm going to make money, this is what I do. I almost always make money if I have a solid trade plan, and this is a solid trade plan. So you put your stop, but you don't move it very quickly, because even if you get a little unlucky and it does this, you're like, yeah, well, I priced it in. I got a 50 pip stop. I'm not sweating bullets. I don't care if I have a minus 50. Because the rest of the day was plus 100, plus 75, plus 80, plus 200, plus you got a whole bunch of others that are rolling, you know? So you're like, oh yeah, if I get unlucky and I lose 50 pips, I don't really care. But I've got to give it room to breathe because I believe in my trade plan. There's such a big difference between someone that says, I believe in my trade plan because it's a great trade plan, versus someone moving their stop quickly because they're afraid of losing money. Well, they're not confident in their trade plan. Then, of course, then we can get even further and say, well, there probably isn't even a trade plan. Okay? But when you get to that next level, that's when your winning starts getting better, where you're not afraid of losing 50 pips because most of the time you make money. Okay? So I analyze that if I'm mentoring somebody, that's like the first thing that we do. So like I've mentored Daniel. He's in the room. I saw you. Good morning, Daniel. You know, one of the first things we did was measure where he puts his stops and the success of that by looking at his trade history. And then I adjusted his stops so that they were quite wide. They're very wide. And I said, just trade as you normally do, but let's just leave your wide stops and see how you did. And I think at the end of the month, he made 1,000 pips profit. And he's like, oh my God. I'm like, well, congratulations, Daniel. We've identified that you're a very good trader, that you understand technical analysis quite well. Your entries are pretty good. And one of the major problems you've had up until now is you've been mismanaging your stops. So let's focus on stop placement and stop management. And that's what we focused on for the rest of the month. Well, how nice is that? Right? So that's where you got to get. When I say you need to know your strengths and weaknesses, it's things like that. Like, what are you doing right? What are you doing wrong? If you don't analyze, you'll never know. Okay? And it's an eye-opener to struggle, and then suddenly, you know, you spend some time with a mentor, you know, a more experienced trader, and all of a sudden you're like, dude, I made 1,000 pips, right? When you go from struggling to like 1,000 pips, like, oh, well, that's what you're supposed to be doing. Let's get some consistency. It feels so good because now you know you're capable. Okay. So anyways, let's get off ZAR. I like ZAR because of the carry. But I pointed out Kiwi. Here's our Kiwi. Beep, 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 beep. Remember, I ignored Aussie and I threw down Kiwi. Look at that. Whoop, whoop, whoop. Nice. Ernest says, I now analyze the market differently. And it takes longer, yeah, but you've gotten better. Cool. And by differently, I imagine the way I teach. Because I preach to teach. Remy says, sorry, late. No, I started early, bro. I started early to catch the ECB meeting. Oscar says, would you call a trader successful if his winner positions average 30 pips? But in those winners, you find 700? Well, if you're taking trades that are like 15 pips or less, I would consider that a loss because you have to calculate the risk you took. But like, I don't really care. If let's say 80% of your trades, 80% are between negative 10 pips and positive 10 pips. But the other 20% are more than 100 pips each. I'm cool with that. Okay. And what you'll find is, like the trader that you gave an example where some of the trades are up 700 pips, but most trades are only up to 10 pips. Well, if you're doing it right, like that doesn't tell me enough information, but if you're doing it right, what happens is you end up having a portfolio. And what you're trying to do is all your entries are trying to make 1,000 pip trades or 500 pip trades. Or even what I like to do often is I'll go in with a 33 pip stop and a plus 333 limit. That's my magic number. For some reason, when my trades hit 333, they have significant declines before they go back up again. And so very often I'll just take the 333. And I don't know what it is. It's just weird. But maybe it's just some mental thing I make it up, confirmation bias. But that's how I often do things, right? But anyways, what you're doing is all these pissy little trades, right, are all trades that are going in the direction of a trend that you're trying to catch. And if you understand that most of these things are basically going to wash each other out, but 20% of the time you're going to catch the trend. So at the end of a year, let's say 6 months, at the end of 6 months, you'll have 30 of these trades and you'll have 30. You'll have 30 of these trades and you'll be doing all right. And that'll be a portfolio. Pareto's law, no. Pareto's law means your strategy might benefit you, but doesn't hurt anybody else. That's what a Pareto law is. Okay. Oh, so Ernest says, yeah, so you've taken the course and you're looking at things differently. Very good. Okay. Gorgeous. Okay. And remember, we talked about this yesterday as a moo trade, right? Yeah, we talked about this trade yesterday. I know, right? Do you remember it? I said the one thing you cannot do is buy it. So the only thing you can do is not trade it or you sell it here. Yeah, you only had 24 hours in advance notice. Cool, right? Euros are looking really nice. Problem is it's got support under it. Euro Swissy doing nothing. That means everybody's losing money. So we're now one standard deviation from the mean. Wonder what's going to happen here. Cable. Let's just go to the standard setup, yo. Let's look around the world. Or do you want to do exotics? Somebody asked about, see, Turkey cut interest rates today as well in anticipation of the ECB doing something. But, okay. Cool, right? So how's my $110 investment doing? My $110 investment, so you can see that by lot size, is now almost $1,600. I know, right? I know, right? Now, if you had only dropped $1 billion, isn't that funny? 110 bucks is now 1,600. Yeah, but it took 2 months. So a $1,000 investment would be worth $16,000 by now. How nice is that? 1,600%. Really? Okay. And again, that was only an example about, that was only an example that we did for me to explain trading with a bias, first of all, but second of all, catching yield. So of that, there's only like, it's only like $250 in interest, right? Let's do this quick calculation. 1,066, but this is 1,200, and that's 100, so 1,300. So 1,300, $267, right? So I've only made 250 bucks in interest payments. So that's the problem with carry trades. Now I'm up 1,600, but only 1,350 of it is pips, right? So I'm like, it's so much now, like, why would I risk the 1,300 pips to save the 250, right? So that's when you start, you get into a situation where you can't sleep at night with the carry trade. Because if that was a $10,000 trade and I'm up $160,000, suddenly I'm like, I want to cash out and buy that Ferrari, right? You know, the numbers get big, right? If you set up your portfolio properly. All right, so everything's gonna be all right. Which one do we want to do? Beast? Nah. Gold? Yeah, well, there's gold. Just riding the 21, yo. Out of position trade, buy at the 4-hour 21. Nice, right? Big Pearl's trading Thai baht and Russian ruble. Oh. When do I plan to cash out on the lira? Whenever I want. Maybe Christmas. Maybe today. But let me ask you. Let's talk about it logically. What did the ECB just say, in your humble opinion? We got the information live. What did the ECB say? We just did this. It's 7:45. So 30 minutes ago, the ECB told us how they want to manage the euro. What did they just say? Oh, okay, Big Pearl. Well, right now, lira is only 19.5%. So actually, I'm going to make a little bit less money every day now. ECB, what did they say, guys? They might cut interest rates, like in September. And they're thinking about talking about quantitative easing. Okay, so let's say in the next 6 months, between now and the end of the year, they implement both these things. We don't know when, but just say over the next 6 months, deposit rate drops to at least a negative 0.5. And they do some form of quantitative easing. Okay. Oh, was I looking at silver? Oh, yeah, someone asked about it. Thank you. Okay. Does anyone agree with this? That in the next 6 months, based on what they just said, these two things might happen or will happen? If you do agree with the statement, then over the next 6 months, is the euro likely to go up or down? Okay. Do you think the ECB will implement an interest rate cut and quantitative easing? And if so, will that strengthen the euro or weaken the euro? Remember, this is your interpretation. I don't know what the heck's going on at the ECB. But you have to put together an answer. What if a billionaire sat down with you and say, hey, I hear, how's the euro doing? You say, oh, I'm glad you brought that up. In fact, there was just an ECB announcement that I watched live. And it made me think that there's two things on the radar screen with Mario Draghi in the ECB. One is they're most likely to cut their deposit rate from negative 0.4 to at least negative 0.5, maybe more. And they are seriously thinking about quantitative easing because of the IFO readings, because of German confidence, because German manufacturing, all these data releases are at very low numbers. For example, German manufacturing is actually contracting fairly significantly. The manufacturing section of the German economy is in recession. And confidence is plummeting, which will eventually affect things like business investment, business spending, and then it's going to trickle down to consumer spending. The whole thing's a real mess. So looking at these two things, quantitative easing is likely to come back on the radar screen in the next 6 months. So here's what I expect the euro to do. And here's how I would trade it if you invested in my firm. The euro's going to suck, and I'm going to sell the heck out of it. Okay? That's one way of doing it. I don't know if any of that's true. I just made it up. Okay? So somebody asked me, how long am I going to stay short euro Turkish lira? Well, at least until the euro gets strong. You know what I mean? Oh, there's still a bunch there. The free videos on my on FX Bootcamp's YouTube channel, they're still there. Or there's some still there. There's the one you need to watch is the how to time your trades. That's the one you want to watch. So it doesn't look like there's either no press conference today or they're not going to stream it. It's really strange. Let me go old school and go to their website. This feature requires cookies. Okay, great. How funny. So they're going to do it here. Weird. So they don't have it on their YouTube channel. They have it on some other YouTube channel. Great. All right, so we'll watch Super Mario like this, huh? Oh, 1, 2, 3, 4. Yeah, that's all you really need to know. Of course, you can go to FX Bootcamp and take entire courses. I don't know how many hours of videos now are at FX Bootcamp. What, 40, 50? Oscar says, it's important to take the time to thank you for every single one of these lessons that I've learned from you, because Forex is just the skin of something deeper. Between the lines, you teach a life philosophy. Well, thank you very much. Thank you, Oscar. Hopefully passion is part of what I share. Yeah, a lot of those are in the training courses. Yeah, random name says short the pound. Yeah, I mean that's a proper bias. That is a proper bias. You wake up in the morning and you ask yourself, is this a good price to sell or not? You're not even thinking about buying. You know what you're going to do before you do it. So is this a good place to sell? No, not really. Okay, great. Well, let's move. Is this a good place to sell? It's a little high. It's a little high. I really wanted to keep it below that. So it's a little high. So not really. Maybe, but oops. Maybe, but not quite yet. Where did it go? Okay, maybe, but not quite yet. How about Kiwi? Getting there. I mean, yeah, this looks better if this starts to roll over. Yeah. This might be one. This might be one. Check. Keep your eye on that one. Next. See how trading goes? It's so much easier if you've done the work in advance. Is this a good place to sell? No, not really. I'd like it to do this first, and then I'll sell it up here. All right, so I got one, maybe a couple others might follow the first one. A couple others are just not that great. So, probably won't get a trade today, but maybe next week I'll start, right? So if it's Thursday today, I'm already looking for next week's trades. That's the other thing. So if I'm looking at this one as I'm looking at it as next week, next month. Okay? So if I can get some decent price action on a small time frame, my trade plan is actually this one. Okay? Next week's M3, next month's Central. Okay? So the question is, does it set up today? Yeah, it might be setting up right this second. Okay? I still think that there's a lot of junk going on here. So I would like this to come back, let's say maybe 618, and then make this move down. Oops. See how I'm threading the needle, guys? Okay. That might be my next week, next month trade. Don't know, but that's how I'm threading it. Look at my Euro Kiwi. Fire! First day of the month. So next week, you should be in next month's trades already. Okay, Ramiz, you should be planning them right now. So like I just showed you on that other trade, whatever it was, pound Aussie, pound Kiwi, those are already next month's trades. Like talking about pound yesterday, I said, look, so they picked a new prime minister. Does it fix anything? Has anything changed? No, not really. Well, yes, the government's changed. And when you put new people in power and they're not used to speaking in front of the cameras, and they're not used to making big decisions that the entire world sees, inevitably they make mistakes. So if anything, someone's going to make a mistake. That's the unknown unknown. There's the known unknowns, and then there's the unknown unknowns. So someone comes out and makes a blunder, pound weakens. Then negotiations start with the Eurozone and go nowhere, pound weakens. So on and so forth. Okay, negative trade balance is fantastic. That's what you want, guys. The bigger the trade imbalance with China, the better. I want huge trade deficits. Huge. That just means the dollar's weak. That's good. Look at the Kiwi now, guys. Yo, yo, yo. I have forgotten what I was going to say. He'll start when he's damn well ready. Yeah, put the tall guy in front.
The Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular and monetary analysis, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels, at least through the first half of 2020, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to our aim over the medium term. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the asset purchase program for an extended period of time past the date when we start raising the key ECB interest rates.
So it looks like Czar got through the bottom. Very hopeful.
Favorable liquidity conditions.
Remember, these are the two shorts that I set up before the news. Oops.
The Governing Council also underlined the need for a highly accommodative stance of monetary policy for a prolonged period of time, as inflation rates, both realized and projected, have been persistently below levels that are in line with its aim. Accordingly, if the medium-term inflation outlook continues to fall short of our aim,
falls short,
the Governing Council is determined to act in line with its commitment to symmetry in the inflation aim. It therefore stands ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim
Simon,
in a
mine is fine.
manner.
I'm rolling.
In this context, we have tasked the relevant Eurosystem committees with examining options, including ways to reinforce our forward guidance on policy rates, mitigating measures such as the design of a tiered system for reserve remuneration, and options for the size and composition of potential new asset purchases. Incoming information since the last Governing Council meeting in early June indicates that while further employment gains and increasing wages continue to underpin the resilience of the economy, softening global growth dynamics and weak international trade are still weighing on the euro area outlook. Moreover, the prolonged presence of uncertainties related to geopolitical factors, the rising threat of protectionism, and vulnerabilities in emerging markets is dampening economic sentiment,
Look at Rand.
notably in the manufacturing sector. In this environment, inflationary pressures remain muted, and indicators of inflation expectations have declined. Therefore, a significant degree of monetary stimulus continues to be necessary to ensure that financial conditions remain very favorable and support the euro area expansion. The ongoing build-up of domestic price pressure.
Transazad is very weak. Well, that's why I got rid of it and put South African Rand there instead. So
Let
you're
me now
welcome.
explain our assessment in greater detail, starting with the economic analysis. Following a rise of 0.2% in the fourth quarter of 2018, Euro area real GDP increased by 0.4% quarter-on-quarter in the first quarter of 2019. Incoming economic data and survey information continue to point to somewhat lower growth in the second and the third quarters of this year. This mainly reflects the ongoing weakness in international trade in an environment of prolonged global uncertainties, which are particularly affecting the euro area manufacturing sector. At the same time, activity levels in the services and construction sectors are resilient, and the labor market is still improving. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions, further employment gains, and rising wages, the mildly expansionary euro area fiscal stance, and the ongoing, albeit somewhat slower, growth in global activity. The risks surrounding the euro area growth outlook remain tilted to the downside, reflecting the prolonged presence of uncertainties related to geopolitical factors, the rising threat of protectionism, and vulnerabilities in emerging markets. Euro area annual HICP inflation increased to 1.3% in June 2019 from 1.2% in May, as higher HICP inflation, excluding food and energy, more than offset lower energy price inflation. On the basis of current futures prices for oil, a headline inflation is likely to decline over the coming months before rising again towards the end of the year. Looking through the recent volatility due to temporary factors, measures of underlying inflation remain generally muted. Indicators of inflation expectations have declined. Labor cost pressures have strengthened and
Where is it? Where's my trade the news? Must be here. Not sure what that was about. So that's what they were looking for.
Broadened amid high levels of capacity utilization and tightening labor markets, the pass-through of cost pressures to inflation is taking longer than previously anticipated. Over the medium term, underlying inflation is expected to increase, supported by our monetary policy measures, the ongoing economic expansion, and stronger wage growth. Turning to the monetary analysis, broad money M3 growth stood at 4.5% in June 2019 after 4.8% in May. Sustained rates of broad money growth reflect ongoing bank credit creation for the private sector and low opportunity costs of holding M3.
It's looking like bounces.
The narrow monetary aggregate M1 continues to be the main contributor to broad money growth on the components side. The annual growth rate of loans to non-financial corporations remained unchanged at 3.8% in June 2019. Notwithstanding some moderation
see, guys?
peak recorded in September,
some things are hitting our support lines, other things are hitting our resistance lines.
Financial corporations
Technically important levels here.
The annual growth rate of loans to households also remained unchanged at 3.3% in June, continuing its gradual improvement. Overall, loan growth is still benefiting from historically low bank lending rates. The Euro Area Bank Lending Survey for the second quarter of 2019 indicates that loan growth continued to be supported by increasing demand across all loan categories. At the same time, credit standards for loans to enterprises tightened in the second quarter amid concerns about the economic outlook, while they remained broadly unchanged for loans for house purchase. Our monetary policy measures, including the forthcoming new series of targeted longer-term refinancing operations, so-called TLTRO III, will help to safeguard favorable bank lending conditions and will continue to support access
Draghi just known that the structural reforms must complement monetary policy, standard ECB speak now.
To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute more decisively to raising the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries need to be substantially stepped up to boost euro area productivity and growth potential, reduce structural unemployment, and increase resilience. The 2019 country-specific recommendations should serve as the relevant signpost. Regarding fiscal policies, the mildly expansionary euro area fiscal stance is providing support to economic activity. At the same time,
Draghi now moved the Q&A portion of the press conference.
Need to continue rebuilding fiscal buffers. All countries should reinforce their efforts to achieve a more growth-friendly composition of public finances. Likewise, the transparent and consistent implementation of the European Union's fiscal and economic governance framework over time and across countries remains essential to bolster.
Draghi being asked a question on a potential QE will be limited to certain asset classes.
Functioning of economic and monetary union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital markets union. And now we are at your disposal for questions.
CBC. Mr. Draghi, could you perhaps elaborate whether this decision to kind of pre-announce a potential package as soon as September was taken unanimously? And the second question would be on the potential APP. Are there any restrictions in terms of asset classes, or do you look at the whole variety of what is out there? Thank you.
Thank you. First, let me give a sort of a summary account of our discussion as it's taken place. First of all, the first discussion where there was broad agreement, broad convergence of views, was the assessment of the current outlook. Namely, an outlook where you still see signs of strength in the economy, as I just read, labor market and nominal wage growth support consumption. Generally speaking, you have resilience in the service sector and the construction sector. At the same time, this outlook is getting worse and worse. And it's getting worse and worse in manufacturing. especially, and it's getting worse and worse in those countries where manufacturing is very important. But because of value chains, this propagates all over the Eurozone.
Market was expecting a rebound in the second half of the year and growth, but now seeing signs of weaknesses and stressing that the manufacturing outlook has been worsening.
General uncertainty
needs to be taken into account.
With us for several months, actually more than a year.
Stressing that.
And which relates, as I said many times, to trade wars, to geopolitical tensions, to now also the possibility of a hard Brexit. Certainly is another factor to take into account, and the slow rotation of Chinese economy. All these factors and probably others are affecting the present outlook and weakening it. So that's the situation. Our projections, last projections, were in a sense suggesting that we might have had a rebound in the second part of the year. Now, incoming signs show weakness of growth in the third quarter as well.
Back above 110.
Less likely now.
Brooks happy.
And all in all, the balance of risk was assessed to be on the downside for the reasons that I've just mentioned, and also for the very fact that the simple, and this point I've made it.
Why do you need a tight stop loss?
The simple prolonging, lingering of this uncertainty is by itself a materialization of one of these risks. And on the inflation side, we saw inflation which is below our aim, and we see projected inflation that says that convergence is further out in time. Though, as I've said on another occasion, the informational content of market-based inflation expectations has to be assessed, taking into account certain technical conditions of these markets. However, also the SPF, the Survey of Professional Forecasts, inflation expectations also gone down. So that's what led the Governing Council to these proposals, to the various proposals. And if I can go through them again. First of all, the introduction of the easing bias through the introduction of the word lower, and at least through the first half of 2020, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to our aim over the medium term. So again, you will see in the set of proposals all over a consistent degree of optionality, very much in the same way we've done on other occasions. We intend to continue reinvesting in full the principal payments from maturing securities purchased.
Draghi just reiterating his Portugal speech that if the medium-term inflation falls short of aim, they'll determine to act.
And in any case,
well telegraphed his potential desire to do additional stimulus.
Then we move to this point where, besides underlining the need for a highly accommodative stance on
Draghi, now that they're committed to the symmetrical
and the acknowledged
inflation in the ECB's language,
both realized
and understood there on their inflation outlook and symmetrical, and was telegraphed in the financial press. Draghi confirmed it today.
New to our language. And then it says, accordingly, if the medium term, this is the trigger for our action, which basically reflects very much what I had said in Sintra. Accordingly, if the medium-term inflation outlook continues to fall short of our aim, the Governing Council is determined to act. And that's the third point, determination to act. And then there is another new language here, in line with its commitment to symmetry in its inflation aim. So that's another part of the language here that's new. And there says, again, what I said in Sintra, but it moves a step forward, namely that we stand ready to adjust all of our instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner. And then we say, again, another piece of...
Draghi just know that there wasn't a vote, there was rather a discussion, and that there were various nuances in different parts of the package. Again, talking about these options that he's laying out.
And we tasked the committees with examining options, including ways to reinforce our forward guidance on policy rates mitigating measures such as the design
Draghi
of
on the
policies
QEs
for
that it's a
reserve
broad
remuneration and
mandate.
options for the size and composition of potential new net asset purchases. So to answer your now, what's this?
Back to where we began.
We didn't actually. We have
Power of support and resistance.
On things we converged, like the outlook. On other things, most people converged with this. Otherwise, we wouldn't have this in the introductory statement. But again, whenever we have a package, so
what do you think's going on here? That would probably be the Swiss National Bank.
Parts of the package. The point is that it was approved as package after a fairly broad discussion, but converging to what I've just read to you. So that's what it is at this point in time. I think you asked me more specifically about the mandate to the committee. It's a broad mandate. We have all the list. That's where we know. That's where we stand, ready to act, and that's what we have had in the past, and that's what the language says, basically. Thank you.
Yes. Yes.
Francesco Canepa, Reuters. So the first question is about the ECB's objective. The close but below 2% is no longer in the monetary policy decision. It's in your introductory statement, but not in the decision. So does that mean something? Can we expect the ECB to?
Draghi did not talk about the QE limits.
Its policy objective.
There isn't a change in the inflation aim, again, being talked by the inflation target was mentioned in the statement, but not in the
force upon itself
on the website.
Now there are two key constraints. One is the capital key, and the other one is the issue limit. While they are both a choice of the ECB, the latter, the issue limit, also has to do with the issue of not becoming a blocking minority. Does that mean that constraint should be regarded as harder and more difficult to get away from, rather than the capital key, which is entirely discretionary and decided upon by the ECB?
Thank you. Look, on the second question, I'll be in a better position to answer you in September. We didn't discuss that. For the time being, however, you can refer to my Sintra language, the language in my speech in Sintra, where I talked about the headroom and the limits and how to view these limits. On the other point, no, there isn't any change really. In fact, it's true, it's not there in the first page, it's in the fourth page. It's just what it is. But we had a discussion about symmetry. And so and there is a sense in the Governing Council that there should be a reflection on the objective, namely it's a close but below 2%, or should we move to another objective? There were different Governing Council members suggesting that we should carry on a reflection on this. Now it's an important change, so we just want to think about seriously. In the meantime, however,
and Draghi just talking about the symmetry, saying that it means there is no 2% cap on inflation.
But now
just that they do not accept permanently low inflation rates.
Reaffirmed its commitment to
that
symmetry
act
around
with determination
inflation aim, which is
whether inflation is above or below the target level.
Basically, close but below 2%. At the same time, we say we don't like the current inflation. So no question about accepting a lower inflation as we are seeing today. I think these two things must be read together.
You got fired up on that one, huh?
So,
whoa, Mario, calm down, Baba.
The discussion that I reported to you before is that basically we don't like what we see on the inflation front. And symmetry means basically that there is no cap of 2% cap. That inflation can deviate on both sides. We don't accept permanently lower inflation rates. And symmetry means that the Governing Council will act with the same determination whether the inflation is above or below the inflation aim. I think that's important to.
U.S. interest rates are on the move higher following the durable goods and capital spending numbers, the long bond into negative territory, now the yield up to 2.578%, the 10-year yield unchanged, while over in Europe, the German Bund back below or above negative 40 basis points.
Yeah, it's true,
about nuances. Would it be maybe possible to detail them a little bit more, whether there's any debate on any size of any package or any scale or timing of a rate cut that most people now suspect will happen in September? For my second question, we've seen quite a lot of bad data this week, notably on German manufacturing and
Draghi just talking about the nuances there, being asked about that, just saying that some of the council members did have doubts about the tiering system.
Expectations of action as soon as today. Was there any discussion of that at the governing council meeting?
Absolute exclusion of any instrument there in their discussion of options among the council.
Action as soon as today, basically, to do a rate cut as soon.
There's no discussion of cutting rates today.
Thank you.
Thank you. Now, nuances were mostly, or if not only, about what to do, whether we should have a package, what to do first amongst this list of instruments. There was no doubts. Well, you know that some council members have doubts about the two-tier system, so we had that as well. And now the statement says that if we are to lower interest rates, that will come with mitigating measures, and that is quite now that's quite clear. So nuances were of that sort of nature. There was no absolute exclusion of any instrument, and that's reflected well in the breadth of the mandate that's being given to the committees. Now, on the second point, you asked whether there was any discussion today. No, there wasn't. There wasn't because the sense is that we see an outlook. Well, first of all, on the inflation front, we don't like what we are seeing. That's very important. Second, we see an outlook which is, in a sense, let me just step back and recall, in the last G7 meeting, when I was asked to make the assessment for the euro area economy, I said, look, it's difficult to be gloomy today because the present situation is one where you see signs of strength. At the same time, you see, especially in certain sectors, in certain countries, a quickly deteriorating economic.
Coming up to the open of pitch rating in energy markets ahead of the NYMEX Open, WTI crude at 56.78 up 90 cents. Natural gas futures up 1% out of the weekly inventory numbers, just below $2.23 for natural gas.
And also
Brazil economy adding 48,400 jobs in June. That is above expectations there for Brazil.
Most likely, the Swiss National Bank is projecting the 110.
My first question
on
about
euro
the tiering system, because you mentioned obviously that you task committees to look at tiering system. Are you taking any of the systems that are already in place in various countries as a benchmark, as your reference point? Because you're probably the only central bank with negative rates that doesn't have mitigating measures. So I assume it's been difficult to introduce, to come up with a system that will fit the Eurozone. So if you could tell us a little bit more about that. Also, my second question, you talk also about the committees. You said that they will look at the options about the size and the composition of the net asset purchases. Does that mean you do not exclude the possibility that other assets could be added to the program if it's relaunched? Thank you.
Look, both questions. We placed ourselves in the hands of the committees. So first question is, what shape will the tiering system have? We have to have the committees work and decide how to design the system. And certainly the experience of other countries' central banks will be certainly an important element in this design, but we are in the hands of the committees. Same thing with the second. We wanted to have a broad mandate, but not that broad after all, but basically leaving some leeway for the committees to reflect because of the complexity of the situation, and so they have to assess many aspects of the current outlook.
Mr. Ferris?
Thank you, Tom Ferris with the Wall Street Journal.
In terms of this new language on the symmetry of the ECB's target, is that something that has formally changed, or that there would have to be some kind of formal agreement about?
So Aussie pays 3 times more than Kiwi, and US dollar pays twice as much as Aussie.
Relating to
so the big carry is really USD.
Was there any discussion about
It's not twice as much, 50% more. Still,
the types of assets that you might look into buying?
The answer to the second question is no. No, there wasn't any. As I just said, it was a meeting where it was based on two. If I just try to summarize the main lines of the meeting, one was an assessment of the current growth outlook and especially of inflation, current and projected. As you know, I mean, inflation expectations now have been at historical lows for some time. I mean, so we had to.
Hey, remember
that.
Bank of Japan is next week.
And that's, again, I stress this, very important.
Oh, and the Fed too, I guess.
And the second part was based on how to, in a sense, design.
Reversal on the Italian government bond yield after being down about 9 basis points, now up 3 basis points.
Yeah, I didn't see anything from you, Val, but
continues really not offering up anything new in the way of information, maybe a bit more balanced view on the economy and some had hope. We're seeing interest rates rise globally. Reversal on the periphery in Europe led by the Italian. U.S. curve now all in negative territory. The long bond is down more than half a point at 2.6%. We also saw that strong durable goods reading.
The rebound of the economy is getting more unlikely. So would you agree that
I don't have an email from you, Val.
Recession in the euro area and especially in Germany has increased? And my second question, U.S. President
Send it right now, Val.
Trump has recently again accused the Europe of currency manipulation.
I was not aware. I mean, with the latest, I'm sorry, interrupted, but go ahead.
Wasn't it before? Yeah, but do you fear that the international consensus to avoid currency war will fall apart now? Or? Thank you.
Thank you. First, the answer to the first question is no. No, we still see the risk of a recession as being.
No, I went through about 200 or 300 emails. I didn't see anything from you, Val.
We still see signs of resilience in the labor market, which continues to improve, admittedly with a lower and lower momentum, but we are going from a peak to peak here in terms of jobs created, in terms of unemployment rates, in terms of employment rates, in terms of dispersion across
Fib Wars 382.
And also the nominal wage growth is above historical average. Household wealth is also.
Well, first of all, I didn't see an email from you, but if you're emailing me trade advice, so I'm not going to respond to that.
On one hand, you have consumption. Services are still resilient. And then you have construction.
Draghi, specifically Germany, saying German manufacturing is experiencing idiosyncratic shock.
A very important part of their economic activity. And this. And a slowdown.
Draghi saying that the significant worsening in the Eurozone, significant fiscal policy comes of essence.
Like I said, I just looked through it and I didn't see anything from you.
And also, I think in Italy,
but don't ask me trade advice. I'm not your trade advisor.
Idiosyncratic shock. And here, in a sense, is what becomes really very important, and that is fiscal policy. We said that here, I've just read that the mildly expansionary fiscal policy supporting activity in the Eurozone area. But if there were to be a significant worsening in the Eurozone economy, it's unquestionable that fiscal policy, a significant fiscal policy, mostly in some countries, but also at Euro area level, becomes of the essence.
So Draghi doesn't seem like he's too upset about what's going on.
Making this point way back in 2014, in a Jackson Hole speech.
Is that amazing?
Monetary policy has done a lot.
German confidence is at a 10-year low. But Draghi says, yeah, well, it's difficult to be gloomy. But Germans are gloomy.
More European bond yields moving into positive territory now. The German 10-year up about 2 basis points on the day. We're almost 6 basis points off of the lows there in the German 10-year yield. Well, U.S. rates continue to rise and prices are under pressure. The 10-year now down 1/4 point.
So I think I should kill it. We've been going for since 7:30 in the morning. ECB didn't do anything. They're thinking about maybe cutting interest rates, but they didn't talk about it today. They're talking about thinking about quantitative easing. They said interest rates will either be the same or lower for the next 12 months. Okay? So we went from resistance to support back to resistance, which means if you have a bias, you got your entry. You know what I mean? Whew. Sitting here a long time, huh? Well, thank you for being on my team. Like I say every day, if you're benefiting from these webinars, please visit tradersway.com. Also, leave a comment, a like, and subscribe on the video to support our YouTube community. Peace on earth. May the pips be with you. May your profits be above average. There's about 4,000 videos on YouTube associated with my work. We have a Mexican peso trade coming up next week. You might want to watch the video on how to trade it and why it works. I'll see you tomorrow. Thanks, guys. Cheers.